Hi everyone, and welcome to SIC Forex. I hope you are having a successful trading week. Feel free to like, comment, and subscribe for more content. The purpose of this video will be to introduce you to the different types of Forex market analysis. To begin, let's look at 3 ways you would analyze and develop ideas to trade the market. There are 3 types of market analysis: technical analysis, fundamental analysis, and sentiment analysis. There has always been a constant debate as to which analysis is better, but to tell you the truth, you need to learn all 3. What is technical analysis? Technical analysis is the study of historical price action in order to identify patterns and determine possibilities of the future direction of price. In simple terms, technical analysis is the study of historical price action. The theory is that a person can look at historical price movements and determine the current trading conditions and potential price movement. For example, if a certain price held as a major support or resistance level in the past, traders will keep an eye out for it and base their trades around that historical price level. Technical analysis look for similar price patterns that have formed in the past and will form trade ideas believing that price could possibly act the same way that it did before. The main evidence for using technical analysis is theoretically all current market information is reflected in the price. Technical traders generally ascribe to the belief that it's all in the charts. This simply means that all known fundamental information is priced into the current market price. Technical analysts believe that price action is the most reliable indicator of future price action. You can look at past data to help you spot trends and patterns, which can help you find some great trading opportunities. What's more is that with all the traders who rely on technical analysis out there, these price pattern and indicator signals tend to become self-fulfilling. As more and more Forex traders look for certain price levels and chart patterns, the more likely that these patterns will manifest themselves in the market. In summary, technical analysis is the framework in which traders study price movement. Next, what is fundamental analysis? Whereas technical analysis involves poring over charts to identify patterns or trends, fundamental analysis involves poring over economic data reports and news headlines. Fundamental analysis of Forex focuses on social, economic, and political factors that affect currency, supply, and demand. The idea behind this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen. The better shape a country's economy is, the more foreign business and investors will invest in that country. This results in a need to purchase that country's currency to obtain those assets. To be able to use fundamental analysis, it is essential to understand how economic, financial, and political news will impact currency exchange rates. This requires a good understanding of macro, economic, and geopolitics. No need to be intimidated by these words. For now, just know that fundamental analysis is a way of analyzing the potential moves of a currency through strength or weaknesses of that country's economic outlook. What is sentiment analysis? Sometimes it's not always about the numbers, but how market players feel. And how do you figure out and trade Forex off that? Sentiment analysis is used to gauge how other traders feel, whether it's about the overall currency market, or about a particular currency pair. The Forex markets do not simply reflect all of the information out there because traders will all just act the same way. Of course, that isn't how it works. This is why sentiment analysis is important. Each trader has his or her own opinion of why the market is acting the way it does, and whether to trade in the same direction of the market or against it. Each trader's thoughts and opinions, which are expressed through whether the position they take helps form the overall sentiment of the market, regardless of what information is out there. As a trader, you have to take all of this into consideration and you need to perform sentiment analysis. It's up to you to gauge how the market is feeling, whether it's bullish or bearish. Then you have to decide how you want to incorporate your perception of market sentiment into your strategy. If you choose to simply ignore market sentiment, that's your choice. However, you're really missing out. Being able to gauge market sentiment can be an important tool in your toolbox. Later on in this channel, we'll teach you how to analyze market sentiment and use it to your advantage. The age-old question remains, which type of analysis is best for Forex trading? In order to become a true Forex expert, you will need to know how to effectively use these three types of analysis. You will find strong advocates for each type of analysis, whereas technical analysis involves poring over the charts and fundamental analysis involves poring over economic data. Fortunately, the different types of market analysis complement each other. Even hardcore technical traders may find some useful fundamental nuggets that can help them with their technical analysis, and vice versa. In the real world markets, prices are constantly changing and usually develop trends. Those changes in price can and do affect fundamentals. This means that trends in prices affect fundamentals, just as fundamentals affect price action. In the next video, we'll be exploring the different types of charts used for technical analysis. You've probably heard of a few, however, we'll be taking a closer look at some more unknown ones to help you make money trading Forex. If you haven't already, feel free to like, comment, and subscribe. Happy trading. Bye.